exponential growth, if you will, during the pandemic, and Cole Financial in particular, a real beneficiary to that, a rise in commissions, revenues, and active investing.
Yes.
So it's not like they're not there. They are there. It's just that they kind of left. But,
yes,
but
but
I
you have to
wanted to
understand
track
the
where they
pandemic.
went next.
Yes, the pandemic was a great example. Although there was a deluge of a lot of investors who tried to open accounts during that time, but the stocks that they were buying were what you call the speculative issues. They were not going to the issues that were what we call more mature, because that was where they saw that gains weren't. They were going to companies that had good narratives but may not have the earnings yet, and that drove prices because the participation was very limited yet, unlike the mature companies where they had all these institutional clients were in it, and that was the cause for the overhang in terms of shares. So, yes, the pandemic created this hype, but it was not the traditional companies. It's more the speculative companies that drove it. So they were speculating, is the word.
But they made money. And
yes,
that got
they
them
made
interested.
money and
Isn't
even
that
lost,
the point
of course, in any transaction. Somebody
maybe
makes money.
jump-starting awareness, for instance? How then did you, if you did,
Yes.
make the most out of that? I mean, it's not how
Yes.
you wanted it to be, but it did attract interest.
Yes, that opened our eyes that there is what we call an investing revolution going on. People had money, and they were really willing to invest it, but they didn't have the proper knowledge. And because of what happened in the pandemic, this may have discouraged most of them from going to our market because they realize it's a Ferris wheel. It goes up, it goes down. So what's this? I mean, they were just discouraged because they didn't understand what they were doing. They were just going with what the meme stocks were doing, right? They were just following social media who were giving them tips that this stock was going to move and all that. And in the end, a good number of them eventually lost money.
Where did they go? Were you able to track the active investors? And how are the active investors right now
at the market, waiting for things
that's
to get
8%
better.
down?
They could still be in the market, but they're not adding anymore. You understand that they kept their investments, even if it's just worth 40% of its value from the time they invest, or even less. They got stuck. They don't know what to do with the investments, and so they're discouraged and looking for other means to grow their wealth. And after the pandemic, of course, we saw interest rates starting to rise. They now realize there's a better alternative. Maybe I should just go fixed income. Gives me 5-6%. Why take all this risk? So today, we're in that situation today, wherein we have great companies that are cheap, but there's an alternative that people can put their money without having to take the unnecessary risk, which is fixed income. Or what they call REITs or preferreds, which are now attracting this set of investors who have extra money set aside for investing, but they're not going to what you call stocks or the capital market that we're trying to promote.